Alpha MBM signed an agreement with government to construct a refinery in Uganda. The people, the public, they are waiting to know, what does it imply to a common person?
The oil refinery is part of our commercialization plan as the government of Uganda, and the oil refinery is meant to largely be one of the outlets for our petroleum that we will produce in the Albertine Graben. So in terms of planning, we did undertake a feasibility study as the government, and we determined the suitable capacity for this refinery at 60,000 barrels per day. What were the key drivers for developing this refinery? Number one, this refinery will enable us strengthen our security of supply of petroleum products, because from the refinery we shall be able to produce diesel, petrol, heavy fuel oil for industries, but also jet fuel for aircrafts. But critically, as the government, and looking ahead and in line with our energy transition, we've ensured that this refinery is able to be integrated with the petrochemical industry, meaning that it should be able to give us products to support the plastic industry, polyvinyl chloride, to help us get products like tents, upholstery, things that go to make surfaces, bottles, etc. So this refinery is not just producing transportation fuels, but it is being integrated with what we term as the petrochemical industry. Why did we do this? Because we are aware of the movement to electric mobility and the fact that gradually we are phasing out transportation fuels, but our petroleum industry must remain relevant for the future.
How much are you injecting in, or how much is this going to cost, and where is the money going to come from?
The way we've structured this project, we estimate it to cost between 3 to 4 billion US dollars, and we are working with the developer Alpha MBM to finalize the designs and then have a concrete investment capital for the project in terms of the capex. Now, the structuring of the project is in such a way that the private sector invests and is a shareholder holding 60% shareholding, and 40% will be held by the Uganda National Oil Company. And the structuring of the project is in such a way that the project will be funded through shareholder equity, meaning that the shareholders, Alpha MBM and its consortium, and the Uganda National Oil Company, in alignment with their shareholding 60-40, will have to avail this money as equity financing.
So Uganda Oil Company, where are they going to get the 40% of those? It's trillions of shillings.
The way we already did with ECOP, where we've supported the National Oil Company to meet its obligation of 50% shareholding in the East Africa crude oil pipeline, we are equally working with the Ministry of Finance. Their contribution, the 40% for the National Oil Company, which is about 1.2 to 1.6 billion US dollars, will be provided in phases. It's not all required at one go. Based on the timelines for the project in terms of implementation, we will avail this in about 3 to 4 tranches.
How long is this project going to take, and when is it going to kick off?
So the agreement we've entered with Alpha MBM requires that immediately we sign the agreement, which we did. So the contractor is required to now negotiate contracts with engineering, procurement, construction companies, EPC companies, and commence the early works. So this one, we are not going to the debt markets the way we've structured it, different from the ECOP, where we had to go borrowing.
How many years is it going to take for Ugandans to see the product come to the market? That is fuel.
Yes, typically an oil refinery, in terms of its development, it should take us between 3 to 4 years for this project to be completed.
How many liters is it going to be producing for the local market? And will this have a bearing in terms of reduction on fuel prices?
Like I indicated, we have designed this project to produce 60,000 barrels per day of petroleum products. Today, in our market, we are consuming about 42,000 barrels per day, meaning that the project is closely matched with our demand. The expectation in terms of pricing, we will stabilize the prices.
Stabilize to what? Right now, let's say the price is about 5,000, close to 5,000 per liter of petrol. How much do you think it's gonna be when you're done with the refinery? Could it come to 3,000 where it used to be?
Well, today we cannot say it will be 3,000.
Estimation.
Our estimation, we are applying what we call import parity pricing, meaning that we price based on the prevailing markets on the world market, what we call the Platts, and then we take into consideration what we call the net backing. What would it mean to sell these products in Uganda? So we do that net backing. So the refinery prices will not necessarily be extremely lower than what we are seeing in the market.
To come out today, if the refinery was completed today, and you already know how much you're spending on the rest of these other things like taxes and the rest plus transportation, how much would it be if it was to come out today?
In terms of compared to the current market price, slightly lower, not significantly lower, because there's an investment that one has to again have a recovery on. You've invested $4 billion about, and there has to be a return on investment in terms of that particular investment. You're purchasing crude oil from the upstream, so there are those O&M costs.
So Ugandans, in other words, should stop being excited.
No, they should be excited because, like I indicated, there would be a slight decline in prices.
But not so.
I wouldn't say we'll halve or make it quarter, but yes, there would be a decline in prices. And in terms of aggregated impact, that would be impactful. Why should Ugandans still remain excited? Like I indicated, we would stabilize the prices. The fluctuation we keep seeing in the market, that would stabilize. But
thank you so much for giving us your time. We appreciate it.
Very welcome. Thank you, NTV, for always looking out for the ministry to update the country.